Hello everyone. Today we'll be doing Edexcel IGCSE accounting paper 1. So let's get started. For the first question, we have which business document shows the return, sales return and payments made during a period. Now we know that credit note only shows sales return, right? Debit note only shows purchase return. Now sales invoice shows selling something on credit, but when it comes to statement of account, it shows everything. It shows a summary of how much goods were bought, how much goods were sold or something, and how much money was paid, how much goods were returned. So the entire summary of the transactions within a period or within a month. So where does it shows? It shows on statement of account. So the only right answer we have got here is statement of account. On the second one, we have which account always has a credit balance. Now we know it is an expense, so it is an expense, so it is a debit item, a debit balance. Discount allowed is also a debit item because it is also an expense. Discount received is a credit item, so, and sales return is also a debit item. So only correct answer we have here is discount received. Why? Because it is a credit item, so it always has a credit balance. So moving on to number 3, we have which is an internal stakeholder. Now we have 4 options, which are customer, investor, manager, and supplier. Now it tells us about internal stakeholder. So what is the difference between internal stakeholder and external stakeholder? Internal stakeholders are the ones who are interested but also part of the running of the business, who are involved in the day-to-day running of the business. And who are external stakeholders are the ones who are interested in the business but they are not involved in the day-to-day running of the business, like not involved internally, right? So customers are not internal stakeholder or external stakeholder. Investors are also not part of the business running, but they're just investing their money. The managers are the ones who are involved in decision making and of the business, and they are also involved in the internal affairs of the business. So these manager is the right answer here, and supplier is also not the right answer because they are not involved in the day-to-day internal running of the business. So they are external stakeholder. On number 4, we have got which accounting concept is described in the statement. Accountants should always take a conservative figure so as not to overstate the profit. So not to overstate the profit. So not to overstate the profit is what we call is prudence. We can't overstate our profit and we can't understate the liabilities. So the only one that matches with our the only concept that matches with this statement is prudence concept, number D. Alright, which statement is incorrect? Now here we have a statement about equity, asset and liability. So what's the accounting question? Equity plus liabilities. Now here they have asked us about the incorrect one. Now here we know this one is right, so this one cannot be incorrect. On option 2 we have equity is equals to asset minus liabilities. It's also right because if equity, if you make it the subject, so asset minus liability is right as well. On number 3 and 4, so on number C, equity minus liabilities is equals to assets. So according to our equation, we can see that no, this is not the right one. This is not the right equation. So the only incorrect option here we have got is number C, because equity minus liabilities is not equal to asset, because asset is equals to equity plus liabilities. On number 6, why does a business depreciate a non-current asset. Now, business depreciates the non-current asset. We know it that they do depreciate it because to spread the cost over its useful life, right? So option D is the right one here. Number 7, which book of original entry in a trader's account will include a credit note sent by the trader? So in a trader's account will include a credit note sent by the trader. Now you are the trader, you are sending the credit note, so where would it be entered on? Now you have to remember the credit note is sent by the supplier, the seller, right? So you are the trader, you are sending it. It means that you have sold it, right? You have sold it and now your goods are getting returned, so you have to issue the credit note yourself. So the only right answer we get here is sales return day book or sales return book. So option D is the only right answer we have got. On question number 8, which is shown in the equity account? Equity account means in the balance sheet equity section, right? Or in the equity account that we do. So we don't add loss profit, we don't add loss on disposal, we don't add loss profit on disposal. We add either profit for the year or loss for the year. So if it's loss, yes, it will be entered on equity account as well. So the only right answer we have got here is option B. Now number 9, the discount column on the debit side of a cash book totaled 950 and the discount column on the credit side of the cash book totaled 420. Now when we do a cash book, we know that on the left side discount column it shows discount allowed, right? Discount allowed. And on the right side it shows discount received. So right side we get discount received, on the left side we get discount allowed. Now we have got the answer in the question that total 950, debit side of the total cash total 950. So it means discount allowed was total 950 and the discount column on the credit side cash book total 420 means discount received was totaled 420. Now the question is asking us how much discount the trader received, how much was received. So this one is the discount that the trader is receiving, which is 420. So 420 is the right answer, option A. And if it asked us about discount allowed, we would have picked 950, option C. If it did ask us about how much the trader is allowing. All right, so moving on to number 10, which is a liability. Now let's classify this one. This is expense. This is income. This one is income. This is expense. Now we are left with this remaining two. Now let's understand what is meant by rental income received in advance. Now rental income received in advance means you are receiving the income, the money, in advance. And what is meant by rent payable paid in advance? It means you are paying something in advance, you are paying for any expense in advance. Now why this one is not the right answer? Because when you are paying for something in advance, when you are paying for your expense in advance, such as rent, you are receivable, you are yet to receive the service because you have paid the money but you haven't received the service yet. So it is treated as asset or other receivable. But what about this? Rental income received in advance. You have received the income in advance, so you are yet to provide them the service, right? So you are liable. So option C is it is a liability, option C. Because when you receive rental income in advance, you are still yet to pay for, you are still yet to provide your customer or your client the service, right? So we are done with the MCQ section. Now we move on to the question 11. Complete the table to show the book of original entry for each transaction. Now, number 1 is already done. So, sold goods to a credit customer. Which book of original entry will this be on? Sold goods to a credit customer. So it would be sales day book. Second, we have paid bank charges. Now, whenever we are paying something, it goes on to cash book. Doesn't matter whether we are paying by cash or we are paying by check. Next one, we have got returned goods to a credit supplier. You are returning goods, so it is purchase return day book. And next up, we have purchase a non-current asset by check. So as it is by check, it would be cash book. Whatever you're doing, either you are paying or receiving money by check or cash, it will also be entered on cash book. And then lastly, we have got withdrew goods for personal use. Now, it will be journal, because if you know the books of original entry, we have got sales day book, sales return day book, purchase day book, purchase return day book, cash book, petty cash book. Now, whatever that doesn't comes inside these things are entered as journal. On the journal book of original entry, it would be the journal, right? Now, on question number 12, we have got on which side of the trial balance each balance would be entered. So that's the most fierce mark in this paper. So carriage outwards, we know it is an expense, so it's debit. Equity is a credit account. Mortgage is a liability, so it would also be a credit item. Return inwards means sales return. So sales return is also a debit item. Trade receivables control. So trade receivable is an asset, so debit side. So easy 5 marks. Alright, now on 13 we have got accounting concept. State which accounting concept is being described. Low value items do not need separate recording. So it talks about materiality concept. So on the next up, we have only items that can be measured in money should be recorded in the business records. So yes, it is money measurement. Money measurement concept. Next up, we have the business is treated as being completely separate from the owner of the business. So which concept tells us about this? It's business entity concept, because this concept tells us that business and the owner has to be treated separately. Why? Because we can't treat them the same, because they're different legal entity. So on number B, next we have state which principle of professional ethics is being described. Now, accountants. Now, this one is easy. Accountants must be free from bias, conflict, or conflict of interest. So it's objectivity. If you don't remember it, you can just go to the book. You can just go through the IGCSE 921 book and get a quick brush up on this concept. Then accountants must operate in a straightforward / honest manner. So which ethics tells us about this? It's integrity. So we're done with this one as well. Let's move on to question 14. State 2 benefits to a business of offering a trade discount. Now, what are the benefits? When a business offers trade discount, they offer trade discount to encourage. It encourages customers to buy in bulk. So that's a point. What the other point we have, it can also improve. It improves customer relationship. It improves relationship with the customer. You can say it improves customer loyalty. So trade discount usually are given to encourage bulk buying, and it helps to increase sales because you are giving discounts on buying in large quantities, or you are giving discount on invoice. So this too would be good enough. Now the next up we have journals, right? So we have ledger accounts as well, right? Let's start. So Miriam's retail business, she maintains a full set of accounting records. On 1 March 2025, the balances on Mira's trade receivable ledger were Alicia 1440 and BZ Traders 458. Mira allows Alicia a 10% trade discount. Right, so 10% trade discount. Also, we have got transactions, and we have got a journal to record the transaction on 31st March 2025. What happened here? Mira wrote off 32 on BZ Traders account as irrecoverable. Now BZ Traders account is being irrecoverable. So how do we journalize it? Now it is decreasing the trade receivables, right? So BZ Traders would be on credit side, and irrecoverable debts will be on debit side. Why is it on debit side? Because it is an expense. And why this is on credit side? Because when something is being written off as irrecoverable, it decreases the receivable. Now we can either write trade receivables or BZ Traders. As we have the name of the receivable, we will write the name of the receivable, right? So it also asked us about a narrative is required. Now what is narrative? You just comment about what is happening on the journal. So we write it as being the write-off and irrecoverable debt. So this is the narrative that we have to go. Now it is offering 3 marks. So 1 mark, 1 mark, and 1 mark for the narrative. Now we are asked to prepare account, Alicia account. So let's start with balance PD. We do have balance PD. Balance on Mira's trade receivable ledger were Alicia 1440, right? So we are asked to do the Alicia account and BZ Traders account as well. So first let's start with Alicia account. So Alicia accounts balance was 1440. So now how to know which side of the ledger your balance BD would be entered on? Always remember that whether this is your receivable or your payable. So as Alicia is our customer, right? Well, how do we know she's our customer? Because we are selling our goods to Alicia. So Alicia, we put balance BD on debit side because she is a customer. So we are receivable from her. Balance BD 1440. And do give the date. It would be March 1, 2025. And now so sold goods on credit to Alicia, list price 850. So list price, do remember that if list price is basically the catalog price, right? The catalog price that you get. Now offering a trade discount means offering a discount on this list price, on the catalog price. So if it is list price is 850, you have to write off 10% as discount. So 850. So if you deduct 10%, it's 90%. What amount do we get? 850 into 90%, we get 765. So 765. Now do remember that whenever we are now trade discount will be immediately written off. This discount will be immediately given when you are selling. But the cash discount, so as it is being given immediately, we don't write it separately. We don't write it separately on the ledgers. Which discount do we write separately on the ledgers? We write discount, cash discount separately. So as this is a trade discount, we'll just write it off. So 850, if you deduct 10%, you get 765. So which side do we need to enter this? Always remember that you are selling further goods to your customer on credit. Now it increases your trade receivables, right? So trade receivables, we know trade receivable is an asset. So if asset is a debit item, right? So according to the rule of accounting, if your asset increases, it is always entered on the debit side. So you can write either as it is being sold on credit, we write here sales day book. Sales day book would be 765. What about the date? It's March 10, right? So March 10. So on the next stop, what's related to Alicia? Alicia returned damaged goods to Mira, least price 120. So least price 120, least price. So if you are getting 10% discount when you are buying, when you are returning at a later date, you don't pay the catalog price, right? You don't return it with the catalog price, you return it with the discounted price. So 120 is a list price. Now out of this 120 amount, 10% discount was given, so we are left with if we do 90%, we'll get the discounted rate. So 120 into 90%. I'm doing it directly. You can also do it like this, that 120 into 10%, you get 12. Deduct 120 minus 12, you get eventually 108. Now the amount, what was the discounted amount of this, of the good that had a list price of 120? It is 108. Now which side do we enter sales return on? Now as we are doing this, now remember, it decreases the receivables, right? Whenever your customer is returning the good back to you, it decreases your receivable, and receivable is an asset. As asset is being decreased, it would be on credit side. So you can write here sales return day book. So you can also write sales return book. How much is it? It is 108. And what was the date? It's March 16. March 16. All right. Then next up we have what's the next part we have related to Alicia. Alicia settled the outstanding balance at 1 March 2025 by bank transfer after taking a discount of 5%. Now balance at 1 March. What was the balance at 1 March? This was the balance, right? 1440 was the balance. Now she also received a 5% discount. Now as this is a cash discount. Now what is cash discount? Cash discount is a discount the customer gets for paying promptly for faster payments. So we do have a separate transactions, a separate we show a cash discount separately, right? Now how do we do this? Now 5%, if you deduct 5%, 1440, if you deduct 5% for it, so we have 95%. So this is the amount that was paid, right? So she has paid us the amount, settled the outstanding balance by bank transfer. So how much amount have we received? We have received 1368, because customers would not pay without cutting the discount, right? If they're getting discount, they will pay after cutting the discount. So after discount amount is 1368, as this is from bank transfer. Now you can either write bank or you can also write cash book, whatever you want. So what's the date? March 30th. And also we have now 1368. Now how much cash discount was given? 5% was the discount, right? So 1440 into 5%. So this much cash discount was given. So we show it separately. We show cash discount separately. And you can either write cash discount allowed or you can also write cash book here. March 30th. Now if something is happening on the same date, I can also choose not to write it again. It will carry forward if I don't write it as it is on the same date. Now always remember that we have to show cash discount separately, otherwise it will not balance out, right? If I write only 1368, here we have 1440, how do I balance it out? So we do have to make a separate transaction, and we can write 1440 here because we are not receiving 1440 in our bank account. So we write the amount that we are receiving, and we write the cash discounted amount on a separate row. Then we are done with Alicia account. We don't have anything else, so we just balance it out. So let's see how much we get. So on the left side we have 1444 plus 765, so it's 2205. It is 2205. 2205. And on the right side we have 108 plus 1368 plus 72. So this side we have is 1548. So we have to find the difference. How do you find the difference? 2205 minus 1548. So difference is 657. So that's balance CD on the right side. That's the amount. It's 657, and it's on March 31st, right? March 31st. So we are 2205. We close the sites, and this balance CD would be entered as balance PD 657, April 1, 2025. So we are done with the Alicia account, and then we have BZ Traders account. Now what are the informations we have got? Firstly, we have got balance PD. Now we do have to remember that only Alicia was getting discount. None of the discounts allowed to BZ Traders was mentioned here, so we will not cut any trade discount for BZ Traders. Now let's start it. BZ Traders balance was 458. So he is also he or she is also a customer, right? So balance BD would be entered on the debit side. Do remember, if it was a supplier, a credit supplier, we would have put the balance bid on the credit side because that would have shown a liability. So balance BD 458. 458. What about date? It's March 1. Now what are the informations we have got here? Received a check 426 from BZ Traders in part settlement of the outstanding balance at 1 March 2025. So it's a part payment of that balance. So we just write it. How much amount was received? 426 by check. So now as we are getting the amount back, so it decreases our receivables. So it would be on right side. You can either write bank, you can also write cash book, whatever you want. 426 on what was the date? March 10. And next up we have got what we have got related to BZ traders. Received a notice from the bank that the check received from BZ traders for 26 had been dishonored. Now, had been dishonored, so it's a dishonored check. Which side do we write it on? We write it on debit side. Why? Because it increases our receivables back. Firstly, we have decreased our receivables. We have credited it, for example, here. But when we went to the bank, it says that the check is dishonored. Why might the check get dishonored? Because maybe the date is not matched, or maybe your payer's account doesn't have got enough balance in their account. So how do we do it? But before that, we also had one. Sold goods on credit to BZ traders, list price 310. We forgot to do this, so let's do it first, and we'll go to the dishonor check. Now, list price, as BZ traders is not offered any trade discount, so we'll just write the list price here. So it was on March 12th. So March 12th, sales day book. It was 310. Now let's jump to the dishonored. Now, whenever your check goes dishonored, it means that your receivable is, you have to increase your receivables, but because you haven't got the money in your account. So, but previously you had reduced your receivable, so you have to increase it back. Right, we have reduced our receivable, and as it went dishonored, we have to increase it back. How do we increase it back? We enter it on the debit side. So dishonored check. Now, what we write? We write cash book or bank here. So you can either write bank or you can write cash book. 426. All right. So next up, we have what we have. Mira wrote off 32 on BZ traders account as irrecoverable. So when balance is going irrecoverable, you are not going to get that money, so you lose hope to get that money back. Now what do? Our receivable decreases, right? We reduce our receivable, so it would be ended on the credit side. How much? Now you can either write irrecoverable debt, or you can also write journal. You can write the book of original entry. So 32. Now you don't have to write both of this. You can either write one. I'm just showing the options. Now we don't have any more transactions, so we just balance the both sides out. Now let's balance this. Right, let's calculate the left side first. 458 plus 310 plus 426. So we get, let's do it off. 1194. What about the right side? 426 plus 32. So this side is 458. Now what's the now this side is, the credit side is lower, so 1194 minus 458. So this is our balance CD. So balance CD 736. Also write the date, March 31st. When was the check dishonored? On March 19th. So we have got close the accounts. Balance CD would be on balance PD. Balance PD would be around the opposite side, which is 736. April 1. So we are done with the BZ traders account. Alright, so next up we are on question 15. Say two types of error that do not affect the balancing of a trial balance. So you pick up any random two Let's write principal. You can write omission, or let's write commission. Alright, so next up we have got correction of errors. Alright, so the motor first, a sole trader has prepared a trial balance that doesn't balance. He discovers the following errors in his books of account at 30 April 2025. The motor expenses account had been undercast by 200. Now, it doesn't tell us about any two ledgers, right? So as it says, motor expense account had been undercast by 200. Undercast means it was understated, right? So understated by 200. So to correct this account, we have to first increase it. Now motor expense is a debit account. Now if we want to add something to debit, we debit it. If we want to reduce it, if we want to subtract something from the amount, we credit it. So we have now here to correct this error, we have to add some balances up, right? Because it was understated. The balance was understated by 200. So how do we journalize it? First, motor expense, we increase it 200, and for this our trial balance will not match, so we have to balance it with suspense. So for this, you do have to have a proper knowledge about the correction of errors chapter, and you do have to have a very good foundation on journals. Number 2, the purchase of a motor vehicle 2000 had been entered in the motor expense account. So this is an error of principle. Motor vehicle 2000 had been entered in the motor expense account. So motor expense account, we have mistakenly entered an amount on motor expense account. So firstly, we have to deduct the amount from motor expense account, right? So let's first do it. Motor expense account, we deduct 2000, and we were supposed to enter the balance on motor vehicle account. So we haven't done it before, so we'll do it now. Motor vehicle account. So this is how you treat an error of principle. We were not supposed to enter it on motor expense account, so we have deducted it from it and we have added it to the motor vehicle account. So on number 3, we have got a receipt from Palmer. A trade receivable 60 had been posted to the account of Parker. Now Palmer has paid you some money. Both of them are receivable, but you have entered it on the account of Parker. Now Parker hasn't paid any money, right? So we will debit Parker because we haven't got any money from Parker. Now what? Let's do it. Let's show it properly. Now as Palmer has paid the money, journal would have been bank 60 debit, as bank is increasing, and Palmer 60 credit. But mistakenly it was, instead of Palmer, it was Parker 60 debit, 60 credit. So we haven't got any money from Parker, so we will add his receivable. We'll add, we haven't got this money yet, so we'll add our receivable, right? So add our receivable. So as Parker is our receivable and we want to add it, we want to increase the receivable because we have mistakenly reduced it. So Parker will be debited and Palmer would be credited because we were supposed to do this. We were supposed to credit Palmer. So the correct journal would be this: Palmer 60 credit. And I do understand that you might not understand this without having a proper foundation on journal and without proper practicing correction of errors. Alright, number 4, a check payment for wages 154 had been correctly recorded in the bank account but had been posted to the wages account as 145. Check payment 154 had been correctly recorded in the bank account. So the amount is correctly recorded in the bank account. So 154 is the correct amount. How do we know? It tells us that this is the correctly recorded. So this is the right amount. 154 is the correct amount. So it was correctly recorded in the bank account, but had been posted to the wages account as 145. Now, what happened? What has happened? Bank was correctly entered. So bank would have been credited, right? When you are paying wages, and wages account was debited by only 145. Now it is understated, right? How much? By how much? By 9. Now, to make it right, we have to increase the balance, right? Because there's a difference. We have understated our wages account. How do we know it that we have understated the wages account? Because it tells us that 154 is the right amount and it was correctly recorded in the bank account. So here we have to increase the amount on the wages account. So how do we know whether we have to debit the wages account or credit the wages account? So wages is a debit account, right? Now we have to increase the debit account. So if we want to add anything to a debit account, we have to debit it, right? So wages of 9 will be entered on debit side as 9. Now how do we balance it? Now, as this is a one-sided error, we have to balance it with suspense, because for this error our trial balance failed to match. Suspense create by 9, and we will go to number 5. A check payment for stationery 40 had been debited to the bank account and credited to the stationery account. Now this is an error of reversal. A check payment for stationery 40. Now let's explain this. Stationery, you have paid money, you have paid a check of 40 for stationery. So the correct journal is this, right? Bank 40 credit and stationery 40 debit. So this is supposed to be the journal. And how do we treat the account? Now, what has happened? It was recorded as debited to the bank account. It means that you were supposed to reduce the amount from bank, but instead you have increased it, you have debited it. So what's the incorrect amount? What was the incorrect journal here? But we mistakenly we have done stationery was credited and bank was debited. Bank debited means we have instead increased the bank balance, increase the bank account. So how do we correct it? Now this is an error of reversal. So let's assume this is a bank account and this is a stationery account. Now what were we supposed to do? We were supposed to enter it on the debit side. And our bank, we were supposed to enter it on credit side, but we haven't done it. We mistakenly haven't done it. What the business has done is that they have credited. They have instead credited to the stationery account and debited to the bank account. But this is not right. Now, to correct this journal, we have to double. First, when we write 40, when we credit our bank by 40, it cancels each other out. So we have to add another 40. So in total, we have to credit 80. For stationery account, first when we write 40, it cancels each other out. So we have to write another 40. Now let me give you a simple logic. Let's assume that your bank account, you had 500 in your bank account, for example. Now you have paid 40. You have bought something worth 40. You have bought stationery worth 40. So 40 was about deducted. So your balance was supposed to be 460, but instead of deducting, you have instead debited. Debited means you have added, right? You have debited 40. So instead you have increased your bank balance by 40. So 540. So how do you get to your correct amount from this incorrect amount? First, when you add 40, it keeps you on the previous state, and when you add another 40, it makes you go to the right amount. It corrects the amount. Now let's also assume that if you had zero balance. Now you had to increase something, what, 10, but instead you have decreased 10, so you are on minus 10. So if you want to go from minus 10 to plus 10, how much do you need to increase your account by? First minus 10, you get to your previous state, and when you add another 10, you get to the right state, the right amount, right? So this is the logic of why we always write double amount on error of reversal. So here, how much do we want to debit? We have to debit stationery 80. Stationery 80 would be on debit side, and bank would be credited 80. Simple logic that we were supposed to increase, but mistakenly we have entered it on debit on credit side. So if we enter one time, it cancels each other out, and we have to give another 40. So in total, we have to debit 80 to correct an error of reversal. And narratives are not required, so we don't have to give any narratives on these journals. So total, we have gotten 10 marks. Now we have got suspense accounts. Suspense account is the most easiest one here. Now here we don't have difference. We don't have the difference balance. Now how do we do it? How do we do suspense account when we don't have any difference of the trial balance? And let's just transfer the suspense journals first here. So motor expense was debit, and motor on suspense was on credit side. So if we want to transfer this to suspense account, it would be entered on credit side, and we write it as motor expense. So on credit side, motor expense 200. And on date, we will, as we are preparing for 30 April, we just write 30 April. And what's another suspense related transaction we have got? Here, this journal suspense was created by 9. So now how do we transfer any journal to their accounts? Now see, suspense is on credit side, right? So we will enter the amount on credit side, but we will just swap the details. That's an easy trick. So on suspense account on the right side, we write it as wages. If you want to know more about this trick of transferring journals to the ledgers, you can comment down below. I can show a separate. I can create a separate video on that. No, wages was 9. Now we don't have any more suspense journals, so we have to keep the difference balance as X. So this is the difference, 209. So this would be our balance BD, or our opening balance, right? So whenever you don't have the difference balance of the trial balance, whenever the difference on the trial balance is not provided, you just assume it as X, value of X, 209. And the date, as we are preparing for April 30, we'll just give April 30. And yes, both sides would match, 209. So we are done with suspense account. So that's easy as 3 marks as well. If the journals are right, if you do the journals right, this 3 marks is a free mark for you. So we have bank reconciliation on question number 16. Here we get Abdus, a sole trader, maintains a full set of accounting records. On 31st January 2025, Abdus received his bank statement, which showed a debit balance of 760 On the same day, his cash book showed a debit balance of 512. Now, whenever you are doing bank reconciliation, do remember that a bank statement debit balance, bank statement debit balance, bank statement. If it is debit, either it would be debit or either it would be credit. Credit means your bank balance of the business. And debit means bank overdraft for the business, for the perspective of the business. Now, why is it debited? Because now the bank, it's the point of view of the bank is receivable from the business. So receivable is an asset. An asset is a debit item, right? So if business's bank balance is an overdraft, it is debit balance for the business. If it shows bank statement credit balance, if it shows bank balance for the business, the bank balance that you have got in your bank account is the liability of the bank, because they are yet to provide you the money. So they are liable. The bank balance that you have in your bank account is liability for the bank, and the overdraft that you have in your bank account is an asset for the bank, because they are supposed to receive that money from you. So do remember this bank statement. So bank statement debit balance means it's showing overdraft, and on the same date, cash book showed a debit balance. Now, cash book is basically the point of view of the business. If cash book is debit, if cash book debit balance, it's business with bank balance of the business. If cash book is shown as credit, it's bank overdraft for the business. So the simple thing that we have to keep in mind, as this is the point of view of the business, cash book is basically the point of view is made by the business. It's their point of view, the business's point of view. So if it is showing a debit balance, it means that it's their bank balance, their asset. And if it's showing a credit balance, it means that it's showing liability, right? So now, how do we do bank reconciliation? How do we approach a bank reconciliation? Now, step 1. Let's break it down into steps. Step 1, we update the cash book. How do you update the cash book? Enter all the transactions which is still yet to be entered in the cash book, but these were recorded in the bank statement. So we just update our cash book. Now, what are the information related to cash book? This is not recorded in the cash book. This is not recorded in the cash book. So this is an error in the cash book as well. This is cash book related as well. A check received, cash book related. Now, this too hasn't entered on the bank statement, last two, right? So that's step 2. That's reconciliation part. Step 2. Adjust or a simple thing. Now let's start first. Cash book. Now let's see what are the amount that was not entered in the cash book. Firstly, we have a balance PD, 512. It's given already. Now we will update our cash book. How? A debit 1200 for rent had not been entered in the cash book. For rent, Dear debit for rent, it means that you are paying money. You're paying money for the rent. So which side? On credit side, as you are paying money, so it decreases your cash or bank balance. It's decreasing the bank balance because it is being paid by the debit. So 1200. Next up, we have bank interest received 72 had not been entered in the cash book. So you are receiving cash. It is increasing the balance of your cash. So it would be entered on debit side. So you can either write interest received or just bank interest, whatever you want. 72. And the third up, we have a credit transfer 118 from Rachel had been entered in the wrong side of the cash book. So credit transfer 118 from Rachel. From, you have to know the key words. From Rachel means Rachel has paid you the money. But it was entered on the wrong side. It means that it was entered on the right side. Now the same thing, the same formula, the same approach, like reversal. It was reversed in the books, right? It was supposed to be a debit side, but it was ended on the wrong side. So how much? 118, right? So let's see this. So you have received 118. So it was supposed to be it was supposed to enter on the debit side, but instead it wasn't entered on the debit side, but it was entered on the wrong side, means on the credit side. So to correct this thing, first you'll have to cut this out, then you have to add another 118. So in total you have to add 236. Let's give an example like this. You had 500 in your bank account. Now you have received further 50. So it was supposed to 550, but you have mistakenly deducted 50. So balance is now 450. Now this is your current state. Now if you want to correct your balance, how much do you add? First you added 50, you go to the previous state, then you add the additional one, you get the right balance. So here we have to debit by double balance by 236. Why? Because it is an error of reversal. Was entered on the wrong side of the cash book. Wrong side means, now how do we know it was on the right side? Because from Rachel you are getting the money. You are getting money by check. Now it should have increased your cash balance, right? But you entered it on the wrong side. Wrong side means, what's the wrong side? If it was supposed to be debit and you entered it on the wrong side, it means you have entered it on the credit side. So we have to debit it by 236. Rachel 236. Then next what do we have? We have the last part of the cash book is it was total credit entries in the cash book had been undercut by 100. So undercut by 100. So we just add 100 on the right side. You get in the right undercast 100. A check received from Samuel, a credit customer, 185 had been dishonored. So it reduces your first you have entered it on the left side, but next you know that that wasn't received by the business, the amount was dishonored. So it would be write the name of Samuel. As this is a cash book, we don't write cash book here. So Samuel 185, and so this side would be 1485, and so 1485 minus 820, it's 665. So balance city 665, 1485, close the balance. Alright, so we have got balance cities will enter on left side. Yeah, so My bad. Yeah, so this is now why balance sheet will enter on the left side, because left side is lower, right? This side is only 820 and this side is 148, 145. So we put balance sheet on the lower side. Now what's our balance BD? It's now you have to know it is on right side. Balance BD on the right side means it is an overdraft. So it is an overdraft. It is an overdraft. Your balance is negative, right? So balance as per cash book, we don't write positive 665. We write negative, because it is balance BD on credit side means overdraft. Overdraft means the business has used more money than they have in their bank account, so their account is on negative balance, right? So negative 665 because they are liable to the bank. Now let's come to the last part. Cash sales deposited in the bank 235 did not appear on the bank statement. Now we just try to solve the time lag here. A cash sales deposited in the bank 235 did not appear in the bank statement. Now we have two things. We have one, bank lodgements, and another one is unpresented check. Now for a quick reminder, unpresented checks are checks that you have given to the supplier or anyone that was supposed to receive money from you. So you have given them the check, but they haven't presented the check to the bank. So there is a time lag, right? There's a time lag in between. You have paid someone a check. So you have immediately written cash book credit. You have lowered your cash book balance. For example, you have 500. You had 500 in your cash book. You have paid someone 100. So you write 400 is in your cash book, and bank was also 500. But it's still 500 because your supplier or whoever you have paid, you have given the check, they haven't went to the bank, they're yet to present the check to the bank. So in this time lag, your cash book is showing 400, and at the same time your bank balance, your bank statement is showing 500. Now in bank reconciliation, we just try to reverse calculate and we just try to match. Now the main purpose of bank reconciliation is to see whether the imbalance in between bank statement and cash book is only because of the time lag, not because of any errors. So now if you want to match your cash book with the bank statement, you have to add this 100 back. So that's why we always add unpresented check. That's the logic. What about bank lodgement? What is bank lodgement? Bank lodgement is, for example, in cash book, you have, like, for example, cash book was 500, bank statement was also 500, and now you have received money from your customer. So plus 100, you have 600 in your cash book, but you haven't presented that check to the bank. That's the time lag. Now if you want to match your cash book with the bank statement, you have to reverse calculate to make sure that the error is only because of this time lag. So what do? We deduct it. If that's a bank lodgement, we deduct it. So that's the logic. Many of you might not understand this because it does require a good conceptual knowledge about this. All right, now how do you identify here? Cash sales deposited in the bank 235 did not appear on the bank statement. It means that you have added this amount on the cash book. But you didn't transfer, or you didn't went to the bank to cash it in. So bank statement is still showing the previous amount. So that's unpresented check. So we have to deduct it. We have to deduct 235. So you can write bank lodgement or you can also outstanding lodgement. $235. And what's the next? Check number 483480 payable to Pandor 140. Now you payable to Pandor 140 did not appear on the bank statement. Now you have paid this amount to Pandor 140 and it didn't appear on the bank statement. It means that Pandor still haven't presented the check to the bank. Now as Pandor haven't presented the check to the bank, it's still yet to be cut from your bank balance, right? But you have deducted it from your cash book. So what do we do to reverse calculate? We just add it back. Now why are we doing this? We just matching our cash book with the bank statement just to make sure that if we reverse calculate this time lags, does our bank statement and cash book matches? If it matches, then well, there is not any that the imbalances between these two accounts is not because of the errors, it's because of some time lags. So unpresented check, how much is it? It's 140, so we add 140, so it's negative 65 minus 235 plus 140, so we get negative 760. Now negative 760 means a bank statement might be showing 760 as overdraft balance as per bank statement. It's 760, right? So here you can match it. It's 760. Now yes, it is matching with our bank statement balance. Now that's the thing that we need to recheck, that after if I adjust some time lag balances that is still yet to be presented in the bank. Some checks are the ones that I haven't presented. Some checks that I have given are not presented yet, that's still yet to be presented to the bank. So one is unpresented check, one is outstanding lodgement or bank lodgement. So if we adjust those time lags, does this balance it? Does our cash book balances with our bank statement? Well, here it is balancing. So yes, we have done it right, and there are no more errors. The only reason why our cash book is showing this balance and bank statement is showing this balance because of these two time lags. I hope you are clear with this. And now we define the term direct debit. So what is direct debit? It's when you are when you have granted any authority to pay for any variable amount to your pays, right? You can write it like this: authority is granted to a third party. Who's the third party? The pay, the one who is going to receive the amount for variable this is a normal definition of direct debit. Next up we have Abdus also maintains a petty cash book with an interest of 200. At 31st January 2025, the subtotals of receipts and payments for the month of January 2025 had been entered in the petty cash book. So now he maintains an interest of 200. Now $200 interest means the float money. Now this is the receipts and this is the payments. Now what's the balance here? Now what do we have to do? Balance the petty cash book on 31st January 2025, bring down the balance on 1 February, and restore the interest amount from the bank on that date. So we can't restore here, we have to restore it on 1st February. So what we do, we balance CD, we balance two sides out. This side is lower by how much? 136 is 63.2. How have I got it? How have I got it? 200 on left side, 136.80 on the right side. So how much balance is there in the petty cash book? So the difference, you had this amount, you spend this amount, so you still have 63.2 with yourself. Now we total the sides, it's 200. It's 200 as well. Now balance CD, balance sheet will come as BD on the left side, on the opposite side. That is February 1. Now here we are asked to restore the interest amount. Means, now what is the interest? It means the float money. Float money is 200, right? If I want to restore it, I have 63.2. My interest is 200. If I want to restore this, means I want to make my balance from 63, from my current balance to my float balance, my interest balance. So how do I need to add? Basically the difference is 200 minus 63.2. So I have to add 136.8. So this is the amount that is needed to be added. Cash book 136.8. So that's how you restore that. Now why we have done it on this date, on February 1, is because the question asked us to do it on February 1. Now if we were asked to do it on the last date of the previous month, we have just put cash book here and would have entered 136.8 here, and balance sheet would have been 200. But the question asked us to restore the balance on to restore the amount on 1 Feb 2025. So here it is. On 1 Feb we added it, and yes, we are done with restoring. That's 4 marks. So on the trade payables control account, it's easy as well. Archie owed credit suppliers 26330. So owed, it means a liability. That's where balance BD will be on right side. Balance BD 26330. Date, what's the date? March 1. And we just cash purchases. There will be some balances which would be irrelevant. Now why this would be irrelevant? Because trade payables control account, in control account we only put the balances that increases or decreases our payables. Now if you are buying something on cash, it doesn't affect your payables. It doesn't increases, neither decreases your payables. So these are irrelevant informations. We never enter cash purchases on control accounts. All right. Now the check payments to supplier dishonored. You have paid this amount to the supplier, but it got dishonored. Firstly, you had decreased. You did decrease your liability, right? We decrease our liability when we pay any money to the supplier. Now it got dishonored, so our liability increased back. So you can either write dishonored or you can write bank 160. You can also write cash book as well. So 160, right side. Now whatever transactions you do, make sure to give my last date of the month. This is the information that we have at last end of the month. So now here we have to choose between one as well: discount allowed and discount received. Now here we have to know that whether we allow discount or we receive discount from our payables. So we receive discount from our payables, right? this is a supplier account. We don't allow any discount to our suppliers. We receive discount from our suppliers. So discount received will come to trade payable account. And where do we enter discount allowed? We enter it on the receivable ledgers. So because we allow discounts to our customers. Now discount received, how much is discount received? 945. Now which side? It will always enter on debit side of the trade payable account. Why? Because it decreases your trade payables, right? So discount received, how much is discount received? It's 945. Now if you are confused about discount received is a credit and why it is entered on debit side, now what's a journal? If we get discount, our trade payable decreases, right? So our trade payable gets debited and discount received gets credited. So that's why on trade payable account it goes to debit side of trade payable account. If you know how to transfer the journals, you understand this as well. Otherwise, many of you just memorize the format. It's alright, but still, it's always better if you understand the concepts. Next up, now we have, this is irrelevant because we don't allow discount to our payables. We receive discount from our payables. Next up, we have payments to credit suppliers. Payments to credit suppliers. You have paid money to our credit suppliers, so it decreases your liabilities, right? So it would enter on debit side. Now just use this liability. Trade payable is our liability. Any activity that increases our, this is a liability to credit. Any activity that increases our liability will enter it on credit side. Any activity that decreases our liability will enter it on credit debit side. That's a simple law and simple logic that we have to use when doing trade payables account. So we have paid money, 35780. So you can write either cash book or bank, 35780. But as we don't have any mention whether it was paid by bank or cash, we just write cash book. The simple, easy, safe side. Next up, purchase daybook total. Purchase daybook means buying on credit, purchasing on credit. Now if our purchasing on credit, it increases your liabilities, right? So it would enter on credit side, purchase daybook. How much is it? 345734. Next up, we have purchase returns daybook. Return daybook means you are returning the goods, so it decreases your liability. So it enter on debit side, purchase return daybook. How much? 1227. So on the next last part, lastly we have the receivables ledger set off. Now set off means you are it's a contra. So contra, it decreases your liabilities. So it is on left side. You can write either contra or you can write set off. It's 340. So left side, how much is the left side? 945 plus 35780 plus 1227 plus 340, 38292. What about the right side? 26330 plus 160 plus 34570 plus 220. So right side is 621280. And what's the difference between these two sides? Minus 38292. So the difference is 22988. Balance city on the left side, 22988. So we get our total 38292. We balance it, And now, what does this balance sheet shows? This one shows how much. Now, why there might be both liability balance and receivable balance? Because in control account, it's not about one individual supplier, it's about all the suppliers. If you have 100 suppliers, maybe 99 suppliers are 99, you are liable to 99 of your suppliers, but missingly you have overpaid one supplier, so you are receivable from that one supplier. That's balance sheet on right side. That's your debit balance. Basically, balance sheet will come here, and the 99 suppliers that you have that you are still yet to pay, that's credit balance sheet will come here. So let's balance BD to 20. Date is April 1. So this is solution for this 10 marks. Here Archie also maintains a trade receivable control account. He suspects wait he suspects not that not all customers will pay the full amount of their debts. He is considered two options: write off a percentage of his trade receivable as recoverable, make a provision for recoverable debts. So you can either choose one. So if you're choosing this one, just put the mark same answer here. Now you do have to show now if a provision for recoverable debt is most appropriate where there is a degree of uncertainty whether or not the debt will be paid. Making a provision, what if you are picking this, how it picking this is right. One, you have to explain it. So making a provision for recoverable debt will result in not overstating the profit for the year, right? And you are following the prudence concept. You're complying with the prudence concept. How? Because when you're doing the provision, you are not overstating the profit. That's one mark. And you are not overstating the receivable. You are not overstating the asset. So you are complying with the prudence concept. Then you just give your conclusion. You can also pick that one, but you have to give proper justification for that. Next up we have here legal costs on purchase of business premises. Legal costs. These are the costs that you incur while buying the asset. Any non-current asset is on capital expenditure. So this is the cost that you incur while buying the asset. So on debit side, bank loan interest on purchase of business premises. So bank loan interest, that's a recurring expense. Now in March scheme they have entered in a capital expenditure, but as this is a recurring expenditure, I think it would be on the right side. Now next we have delivery cost of new machinery. Delivery cost, a cost that we incur while buying the asset. So on debit side. Then insurance of a new machinery, it's recurring expenditure as well, so it would be on revenue expenditure. Now finally we are on the last part of our paper 1. Shauna started her business on 1 January 2022, purchasing 2 machines at a cost of 8,000 each. She decided to depreciate her to depreciate machinery at 20% using the straight line method on a month by month basis. Now month by month basis means we also call it pro rata basis. So you have to go month by month here. Now month by month basis, how do you do it? Let's first start with number B. On 1 July 2024, she purchased a new machinery for 10,400. Calculate balance for machinery account at 1 July 2024. Balance of the machinery cost account. So Firstly, here she had two assets, and on 30 June 2024 she sold one asset. So on cost account, so she had two assets which were 8,000 plus 8,000, which was 16,000. But in the meantime, she sold one of the asset. So she's remained with 8,000 worth of asset, and she bought a new one which is 10,400. So she still had 18,400 worth of asset at this date. Why we have deducted this? Because by the time it was 1 July, she sold one of her asset. So that's the balance of on the cost account. It's dollar. All right. So next up we have this provision for depreciation account and disposal account. Now disposal account, let's do the disposal account first. Here she had used, it was purchased on 1 Jan 2022. Now what I do is I just see how many years it was used by, right? So it was bought on Jan 1 2022. So she used it for the entire year, right? So that goes 1 year. What about the second year? It starts Jan 1 2023. She used for the entire year. So here goes 2 years. She sold it at 30 June 2024. So we'll just keep on doing this till the asset was sold. On number 3, Jan 1 2024, but it was sold when? On 30 June 2024. So an entire 2 year was used, right? As it is straight line, our formula is cost into given percentage, right? So now how do I know it was 8,000? Because two machines at cost of 8,000 each. One is 8,000, so two is 16,000. One of our asset was sold, so that's 8,000. Now 8,000 into 20%, we get 1,600. And year 2 was used in full as well, so 8,000 into 20%, we have 1,600 here. Now what about third year? That's the year it was not fully used. Now the normal pattern we have got for depreciation was that full years is to be charged in the year of purchase but not in the year of disposal. But here we have got a month by month basis. Now how do we approach a month by month basis? Now on the third year, it was not fully used. It was used for how many months? January, February, March, April, May, June. It was used for 6 months, right? Now how do we calculate it? We can first calculate for the year. 8,000 into 20%, we get 1,600 for the full year, right? But it was used for only 6 months, so into 6 divided by 12, you get 800. You can also do it like this. 1,600 is for the year. If you divide it by 12, you get for the 1 month. If you divide it with the number of months used, you get 800 as well. So 1,600, 800. Its total depreciation was 4,000. Now we know the cost for the assets sold is 8,000. For the provision for depreciation is 4,000, and the selling price is how much? Selling price is 4,600. And so how much is carrying value? How we can also find the gain or loss. Carrying value is 4,000. Asset is sold at 4,600. The 600 was profit. So we can easily do the disposal account. Now if what I like is I used to do it as journaling. First, I used to do this: motor vehicle, 8,000 credit. These are the journals basically. If you want to do by doing journals, you can also do this. Secondly, provision account, provision for debt, depreciation is 4,000 debit. And balance it with disposal. Now what is disposal? This is a temporary account that we do to sell our asset, to write off the cost and everything from our ledgers, right? On third, we are receiving money, so our bank increases by how much? By selling price. Balance it with disposal. If you like journals, you might like this as well. Number 4, as we have gained, our income statement will be credit, balance it with disposal. Now, is this mandatory? No, I'm just showing this to elaborate it more, to show the journal entries for this disposal account. Now we write the cost here on the debit side. 8,000 is the cost. Now what about the date? We write the date of the selling date. What's the selling date? 30 June 2024, right? 2024 June 30. And on the right side we write bank. Now those who like to do journals and transfer it to the ledgers, it's simple. And disposal is on the debit side, so disposal account, write it on the debit side, just switch the detail section, you get it. What about this one? Disposal is credited, balance would be entered on credit side, right? Provision for depreciation here, disposal is credited, entered on the disposal credit side. On details, just write bank. So bank 4,600, provision 4,000, and income statement, whatever the last one, it is on debit side. Or you can just balance it out with income statement. It's that easy. This side is lower by 600. 600, 8,600, 8,600. And if you want to transfer this ledger, disposal is debited on disposal account, debit side, income statement. Now you can also do this. So if you were selling it above carrying value, it's a gain. If you are selling it below carrying value, it's a loss. Now gain or loss, it is posted on the income statement, right? So if it's a loss, it's an expense for the business. If it's a gain, it's an income for the business. Now income is a credit item, and expense is a debit item. So if you are gaining, your income statement would be credited. If you're making a loss, it's an expense. Your income statement will be debited. Basically, your income statement represents the gain or loss that you have realized when selling your asset. So this is the disposal account. Now what about the dates? Always use here the selling date, which is June 30, 2024. And on income statement, make sure to give the last date of the year, which is here 31st December 2024. Why do we do it with this? Because we always do income statement at the end of the year. That's the logic. We are done with disposal account. Now let's do the provision for depreciation account. Now here they haven't provided us with the balance BD, so we have to find balance BD by our own. Now she started the business on 1 Jan 2022. So how many years? Jan 1 2022, she passed 1 year, for business Jan 1 2023. Now we are doing the asset, we are doing this account for Jan 1 2024 from to December 31st 2024. That's the period that we are doing it for, right? So before this, prior to this year, the assets were used for 2 years, right? How do we know this? Because here they haven't shown us any balance period of the provision account. So here, but we know that we are doing account for this, right? 1 Jan 2024 to 31st December 2024. Now, prior to this year, the asset has been used for 2 years, right? So 2 years. So we have got asset A, asset B, asset A, asset B, 8,000 into 20%, 1,600. Year 1, 8,000. Year 2 as same as well. So in total, asset B A was depreciated by 3,200. Asset B was depreciated by 3,200. In total, 6,400 is the total depreciation that they have accumulated in the 2 years. That's how we find the balance BD of the provision account. So balance BD will be on the right side. Date would be Jan 1 2024. Then we do this. We have sold one asset, right? We have sold one asset which had a depreciation of 4,000. Now if you want to transfer this journal, it's easy. Provision for depreciation is debited, so enter the amount on debit side, write it as disposal. If you want to know more about this journaling technique, you can comment down below about this. Disposal 4,000. What do we write on date? It's the last date of the year, June 30, 2024. So we are done with this. Now we have to find the depreciation that is charged, the depreciation expense for the year, right? Now for this we have 3 items. We have sold, we have asset A, asset B, 8,000, 8,000. Now we have sold one asset and we have bought another asset, asset C, here. Now how do we do this? Here, asset A has depreciated by, for example, we have sold asset A. Now asset A has, on this year, asset has depreciated 800, right? So, because it was used for 6 months, 800. Let's do asset A, asset B, asset C. Now, how did we depreciate it? 8,000 into 20%, 1,600 into 6 by 12. We got 800 for asset A. And asset B, the another one with 8,000, which we haven't sold. At 8,000 and 20%, it was 1,600. And asset C, how much was the cost for asset C? This new asset is 10,400, right? Now, as it is month by month basis, we haven't used it for the entire year. We have used it for how many months? We have bought it on July. The July, August, September, October, November, December. It's only 6 months. So you find the amount, then what's the amount if we do, what's the amount for the year? 10,400 into 20%. It's 28,2080. Now we have used it for only 6 months. 6 by 12 into 6 divided by 12. It's 1040. I hope you're all clear with this now. What's the total depreciation of all my assets that has been used this year? 1040. Let's start from the beginning. So 800 plus 1600 plus 1040. So that's total of 3440. That's the depreciation that we have accumulated this year. Now how to record depreciation expense? What's the journal? The journal is provision for depreciation. Here we have got 3440 credit. We debit income statement. That's the journal. Now if you want to transfer it, provision is created here, and now what's the logic for writing income statement on the right side? Because provision is a credit item, right? Provision is a credit item. When we further depreciate, when we further record provision, it increases. So when credit increases, it's always on credit side. That's a logic that you can remember. You can do to remember. They can use to remember, but you should also know the format. So 3440. What about the date? December 31st. Now balance CD will be on this side because this side is lower. How much? Let's see, 3440 plus 6400. So total is 9840 minus 4000, 5840. That's CD, comma SPD here, the right side. So this here goes the solution for the depreciation part as well. Now, what about the date? Yes, important part. December 31st, 2024. So we are done with the depreciation part. Now, lastly, here I would suggest you all should go through all the mark schemes for the theoretical part, as mark scheme is quite sufficient for the answers. Let's read it. Shauna has been advised that she should consider charging depreciation on straight line method rather than reducing balance method. Advise Shauna whether or not she should change her method for charging depreciation. Now, we can argue that, well, if she is changing her depreciation, it's going to go against the consistency concept. Charging depreciation. And should change her method of charging depreciation. So continuing to use reducing balance method will reduce the charge for depreciation after the first year, which will result in a higher profit of the following year. Because reducing balance method cost goes like this, right? First year you get the highest depreciation, second year it gets lower, third year it's get even lower. So in the following years the expense gets lower and profit increases. So changing to use the straight line method will result in the same depreciation charge each year of ownership, resulting in lower profits and therefore a lower net asset value for the business. Now you can talk about concepts here. You can talk about consistency concept, that changing it would breach the consistency concept, would go against the consistency concept. And then you can give a conclusion that yes, she should or she should not change the method or not. You can give a rationale that, well, I will advise Shauna not to charge depreciation because it goes against consistency concept. You can use this. And if you can also give a however to it, that it might go against the prudence concept as profits are getting overstated on the following years. So here goes the solution for May 25 paper 1. I hope you were clear with the concepts, and all the very best for the exam to the May 26 candidates. Alright, see you in the next video.